Welcome to the Deep Dive, your shortcut to getting smart about complex topics. We bring you the facts, maybe a few surprises, and hopefully keep you engaged along the way. Today we're diving into something loads of people dream about, starting your own business, right here in the US. Whether you've got a killer idea ready to go or you're just, curious about entrepreneurship, it can feel, pretty overwhelming, like finding your way through a jungle. So, our mission today, to give you a kind of map for that jungle, we've gone through our source material, your blueprint for a business launch in the U.S., and pulled out the absolute must-know steps and strategies. The idea is to give you a clear path, the vital info, without making your head spin.
And having that structure, that path, it's not just helpful, it's crucial. It builds resilience. Starting a business is exciting, absolutely. Financial independence, building something, great goals. But the planning, the regulations, people often underestimate how much is needed before you even think about opening. Really, those very first choices you make, they can set you up for success or they can, create problems you won't see until later.
Okay, so let's unpack that. The blueprint says before you invest serious time, serious money, there are two things you absolutely have to do first. Number one, market research. You might love your idea, but does anyone else actually want it? Is there real demand? And digging into that means getting specific. Who exactly is your target customer? You need to know them. Then look at your competitors. What are they doing well? And maybe more importantly, where are the gaps? What aren't they doing that you could? It's about understanding people, their habits, what they need, what annoys them. You could do this with, online searches, surveys, talking to people directly, reading industry reports. The goal isn't just to say, yep, people might buy this. It's to use real data to sharpen your idea, figure out your unique edge, and know how you'll stand out.
Right. And here's a deeper insight on that. Market research isn't just about confirming your idea, it's also incredibly powerful for invalidating it. It sounds negative, but it's not. It's about finding out early if you need to pivot or maybe even scrap the idea before you sink a ton of resources. It forces you to test your core assumptions. Sometimes you find needs you didn't expect or blind spots in the competition. That can lead to something much stronger.
That's a really important point.
Mhm.
Okay, so once you have an idea that's actually been tested, validated, what's next? You need that roadmap. That's where the business plan comes in.
Exactly. The strategic guide.
It lays out, how you'll structure the business, how you'll run it day to day, and how you plan to grow. Typically, it's got sections like an executive summary, what your product or service actually is, market analysis, operations, marketing and sales plans, and the big one, financial projections, detailed ones. Writing it forces you to think through everything. How do we make money? What are the costs? Who do we need to hire? Even if you're funding it all yourself, it's vital. It helps you set milestones, track your progress, and of course, if you need a loan or investors, they'll definitely want to see it. It's usually the first ask.
Yeah, and people sometimes see the business plan as just this static thing for banks, but it's really your internal compass. It should be a living document, something you revisit. Helps you make decisions, stay on track when things inevitably get complicated. Honestly, trying to run a business without one, it's like trying to navigate without a map or a rudder. You're just drifting.
Makes sense. A good plan is your guide, and often it's the key to getting the resources you need. So once you've got that plan, how do you actually fund this thing? And what's the right legal setup? Let's get into that, the financial and legal core.
Crucial stuff.
First up, figuring out your funding needs and actually getting the cash. Your plan should spell out startup costs, equipment, inventory, website, licenses, all that, plus ongoing costs until you're profitable. If your savings aren't enough, you explore options. Small business loans are common, maybe SBA-backed ones.
Right, the Small Business Administration, they offer support.
Or traditional bank loans. You might use personal funds, credit lines, or you could bring in partners or investors. They give you capital, you give them equity, a piece of the ownership.
Which has big implications.
Yeah, definitely. There are also things like crowdfunding or maybe grants, depending on your industry or background. But you've got to choose carefully. Taking on a big loan means you need the cash flow to pay it back, right?
Absolutely. Serious pressure there.
And giving away equity, that means you're sharing ownership, sharing profits, and potentially giving up some control forever.
And that's a point entrepreneurs sometimes don't fully weigh. That trade-off between debt and equity. It's not just about the money now. It's about long-term control, your ability to make quick decisions later, how easy it is to get more funding down the road, or even sell the business. You really have to think about how funding aligns with your ultimate vision for the company. It really shapes your risk and your potential upside.
Okay, so funding's one piece. The other huge foundational piece is the business structure itself.
Mm.
This is a major legal decision. In the U.S., the main choices are sole proprietorship.
Just you, basically.
Right. Or a partnership if there's more than one owner. Then you have the limited liability company, the LLC,
Very popular.
and corporations, either an S Corp or a C Corp. This choice affects, well, almost everything. Registration, taxes, and importantly, your personal liability. Are you on the hook if the business owes money?
That's the million-dollar question for many.
A lot of small businesses start as sole proprietorships, or LLCs. LLCs are popular because they're relatively simple, but offer that liability shield generally. Your personal stuff, like your house, is protected if the business gets sued or goes bankrupt.
Generally, yes, if you follow the rules.
Corporations, especially C Corp, are more complex. Think shareholders, boards of directors.
Yeah.
But they're standard if you want serious outside investment, like venture capital, or maybe plan to go public someday.
They allow for different types of stock, which investors like.
The downside to a C Corp can be double taxation. The company pays tax on profits, then shareholders pay tax again on dividends.
Which leads many to the S Corp.
Exactly. Smaller corporations or even LLCs can elect S Corp status with the IRS. This lets profits and losses pass through directly to the owner's personal taxes, avoiding that corporate tax hit.
It combines some benefits.
Because it's complex, the source definitely says, talk to a lawyer or a CPA early on, don't guess. This decision sets the stage for everything else.
It absolutely does. And the insight here is, don't just pick based on what's easiest today. Think about where you want the business to go. An LLC is easy now, but if you know you'll need major venture capital later, a C Corp structure is often preferred by those investors. Getting it right up front saves a lot of hassle and expense trying to change it later. It's about building that stable legal foundation from day one.
Totally makes sense.
Yeah.
Okay, so we've mapped out the big financial and legal strategy. Now let's talk about making it official. Getting the name, the registration, the protections in place. First, picking and registering your business name. This can be the fun part.
Sometimes the hardest part.
Ah, true. You need something unique that fits your brand. But it's not just creative, it's legal. You have to check if the name's available. Search your state's business registry, do a trademark search, make sure no one else is using it.
Crucial step. Avoids headaches later.
Once you find a unique name, you register it when you form your business entity. Or if you're a sole proprietor using a made-up name, you file what's called a DBA, doing business As.
Lets you operate under that name legally.
This gives you the right to use the name in your state. For broader protection, especially if you operate online or across states, you should look into federal trademark registration.
Stronger protection nationally.
And don't forget the digital side. Grab the matching domain name for your website, lock down the social media handles. It's all part of the brand identity now.
Yeah, that name is often your first impression. It's core to your brand. People sometimes rush this and find the names taken, or worse, it steps on someone else's trademark. That can be a nightmare. Securing the name legally and digitally at the same time, it's the smart move. Saves so much potential trouble.
Good advice. Name secured. Next up is registering the actual business entity. This is what makes it official in the eyes of the law.
Filing the paperwork.
Right. If you formed an LLC, you file articles of organization with your state. For a corporation, it's articles of incorporation. You pay a fee, naturally.
Government loves fees.
Huh? If you're a partnership or sole prop using a fictitious name, you might just register that DBA. But wait, there's more. You also have to get all the required business licenses and permits. This can be a bit of a maze.
Understatement.
There are general business licenses that any cities require, then specific permits for certain industries, restaurants, construction, childcare, you name it. Even if you work from home, you might need zoning approval or a home occupation permit. Check federal, state, and local rules.
It's layered. Federal might apply, state definitely, and your city or county too.
The source suggests checking your state's Secretary of State website and also looking into local small business development centers, SBDCs. They offer free help navigating this.
And that maze of licenses and permits, it can feel overwhelming, like just red tape. But missing one isn't trivial. It's critical for operating legally. It avoids fines, maybe even getting shut down. So doing the homework here isn't just about compliance, it's really about protecting your entire investment.
Okay, next on the official checklist, getting your tax IDs. Your business needs its own identification numbers.
Like a social security number, but for the business?
Exactly. The main one is the Employer Identification Number, or EIN, from the IRS. You absolutely need an EIN if you have employees or if you set up an LLC or corporation. But even if you're flying solo, Getting an EIN is a good idea. It lets you open a business bank account without using your personal SSN everywhere.
Which is good for privacy and professionalism.
And it's free. You just apply on the IRS website. Easy peasy.
Relatively easy, yes.
Beyond the federal EIN, you also need to check state and local requirements. If you collect sales tax, you'll need a state seller's permit or tax ID. If you have employees, state payroll tax registration is needed too.
Right. State unemployment, disability insurance in some places, more layers. And that EIN, it's more than just a tax number. It really helps establish your business as a separate entity, using it with suppliers, banks, instead of your personal SSN. It adds security, signals you're a legitimate operation, builds trust.
Good point. Okay, this next one sounds basic, but the blueprint really stresses it. Open a separate business bank account. Keep business and personal finances completely apart.
Absolute critical, non-negotiable, really.
Think of it like building a firewall. A dedicated account makes tracking income and expenses way easier, especially for taxes. But legally, it's vital for protecting that liability shield we talked about with LLCs and corporations. If you mix funds, pay personal bills from the business account, or vice versa, it's called commingling. And courts can see that as evidence that the business isn't truly separate from you.
Which means they could potentially go after your personal assets house, savings if the business gets into trouble, piercing the corporate veil, they call it.
Exactly. So separate accounts are key. You might also want a business credit card to start building business credit history and set up some kind of bookkeeping system right away. Software like QuickBooks, or maybe hire a part-time bookkeeper. Track everything from day one. Makes life much easier.
Yeah, that separation isn't just neat accounting. It's a powerful legal safeguard. It reinforces that your business is distinct, essential if you chose an LLC or corporation specifically for that asset protection. It's a simple action with huge protective benefits.
Okay, last step in this making it official phase. Business insurance. Protecting your venture from the unexpected.
Another non-negotiable, even if it feels like just an expense.
Right. It costs money, but it can save you from disaster. Most businesses need, at minimum, general liability insurance. That covers things like accidents, if a customer gets hurt on your property, or claims of negligence.
Slip and falls, that kind of thing.
If you have physical assets equipment, inventory you'll want, property insurance, or maybe a business owner's policy, a BOP, which bundles liability and property.
Covers theft, fire, damage.
If you provide services, consulting, design, accounting, professional liability, also called errors and omissions or E&O, is crucial. Protects you if you make a mistake that costs a client money.
Very important for service businesses.
And if you have employees. Almost every state requires workers' compensation insurance, covers medical costs and lost wages if an employee gets hurt on the job.
Yep, mandatory in most places.
So yeah, insurance adds to your budget, but it's the shield that protects your hard work from things that could otherwise wipe you out completely.
That's the real insight. Think of it less as an expense, more as critical safety net. It buys peace of mind. It protects potentially years of effort from lawsuits, accidents, unforeseen events. Operating without it, it's like walking a tightrope with no net. Just too risky.
Okay, so we've navigated the legal hurdles, the financial planning, got the official stuff sorted. You're basically standing at the starting line ready to launch. Which brings us to the final step in the blueprint. Actually preparing for launch and then focusing on managing and growing the business.
The ongoing journey begins.
Exactly. This is where you finalize your product or service details, set up your shop or website, and really pick your marketing plan into gear. Get the word out. Online ads, social media, maybe local outreach, whatever fits your business.
Reaching those customers you identified earlier.
Right. If you need staff, now's the time to understand labor laws, start recruiting, get your team trained, and once sales start, it's all about refining things, making operations efficient, keeping customers happy, and don't forget taxes. If you owe estimated taxes, mark those quarterly deadlines. Keep meticulous records, receipts, expenses, income.
Bookkeeping becomes your best friend. Or maybe your necessary chore.
Yeah. The blueprint really hammers home that running a business is constant learning, constant adapting. Don't be afraid to ask for help. Mentors are invaluable. And use those free resources, the SBA, SCORE mentors, your local SBDC. They offer fantastic guidance.
That's a key takeaway. This isn't an endpoint. Launch is just the beginning. Success really comes down to that continuous cycle. Learn, adapt, solve problems, listen to your customers, watch the data, keep improving, always be iterating.
So we've walked through the 10 steps, the practical blueprint. But maybe let's zoom out for a second. What are some of those bigger picture things to keep in mind?
Good idea. The realities beyond the checklist.
Well, the source definitely acknowledges it's tough. Starting a business is incredibly challenging, but also potentially incredibly rewarding. Expect setbacks. Things will go wrong. It helps to have a personal financial cushion because you might not be able to pay yourself a decent salary or any salary right away.
Very common reality. The business eats first.
For managing risk, keep those finances separate, like we said. Try to avoid personally guaranteeing loans if you can help it. Maybe even think about an exit strategy down the line.
Planning for contingencies. Smart.
But on the upside, owning your own business can offer tax benefits, lots of deductible expenses. And the biggest reward for many, freedom. Charting your own path, building your vision.
Absolutely. And looking at that bigger picture, it really highlights that entrepreneurship is a deep commitment. These steps give you the how, the mechanics, but the what-if handling challenges and the why, your core motivation, need constant attention to. That means building resilience for the tough times and always keeping your ultimate goal, your vision, clear in your mind. That's what fuels you through the hard parts.
Well said. So there we have it, our deep dive into your blueprint for business launch in the U.S. We covered the essentials, starting with solid market research, crafting that vital business plan, figuring out funding, choosing the right legal structure,
Registering your name, getting those tax IDs.
separating finances, getting insured, all the way to launching and managing growth. Following these steps isn't just about bureaucracy. It's about building a strong foundation so your business has the best chance to succeed. And the source material leaves us with this thought. With real passion and sheer persistence, your small business really can thrive.
It's definitely possible.
But here's something to chew on. Even with the best blueprint, the real magic isn't just in the plan. It's in the execution, the learning, the constant adaptation. It's a dance. So how will you use this structure not just to launch, but as a springboard? How will you turn those inevitable challenges into new opportunities for your vision? Thanks for joining us on this deep dive. We wish you all the best on your own entrepreneurial journey.